In today's topic, we're going to talk about the $8,000 first-time homebuyer tax credit. Now, I'd like to just share with you that I'm not a certified public accountant or an accountant of any kind, and you're going to want to qualify this information with your tax advisor before you move forward. But I'd like to just share the basic requirements in order for you to feel and find out if you're eligible for the program. So the first thing is, who is a first-time home buyer? What's the definition of a first-time home buyer? Well, first-time home buyer is someone that has not owned a primary residence in the last 3 years. If you file jointly, you and your spouse cannot have owned a primary residence in the last 3 years. Now, some of the other highlights are, there's $8,000 on the table. How much of that $8,000 can you get? Well, first of all, you have to understand that you must purchase a property between January 1st, 2009 and December 1st, 2009. That's the program deadline. You must settle on the property within that time frame. Now, the way the $8,000 tax credit works is you get 10% of the purchase price of the home that you bought. So as an example, if you buy a $7,500 home, a $75,000 home, you would be eligible for 10% of that. So that would be $7,500. Now, if you bought a $200,000 home, you would only be eligible to get $8,000 because it's capped at $8,000. Now, let's talk about some other eligible requirements, and that would be income. Now, if you're a single taxpayer and you file single, then you can't make any more than $75,000 per year in order to be eligible for the program, the full amount of the program. Now, if you file jointly, you can't make more than $150,000 per year on that joint account. Now, there are some phase outs where you can get a partial amount and all that, but I'd prefer you talk to your tax advisor about that. Now, some of the other highlights are you don't have to pay the money back. This is free money. As long as you qualify for the other requirements, you do not have to pay this back. Now, there is one big but. The big but is you must own the property for over 3 years, okay? If you sell the property before that 3 years is up, you will have to pay that tax credit back, and that will be paid through the sales proceeds of the home. So pretty much you need to keep the house for over 3 years in order for that to be free money. And I think that's pretty much it. The way it works is that tax credit, I just want you to understand that tax credit will not come back to you until after you purchase the home. So this would be good for people that want to buy a house and maybe there's some updates in the home that they want, and they'll be reassured that they'll be able to get that money after they send their taxes in April, on or before April 15th of 2010. So if you buy a home for a lesser price and get a lesser monthly payment and buy a home that may need new carpet or may need new paint, you'll know that you'll be able to get that money in your tax rebate. So that's pretty much the way it works. I hope this information has been helpful to you and you understand the $8,000 first-time homebuyer tax credit just a little bit better.